Good morning, everyone. Very glad you are here with me today. Well, we've done a couple of these already. They've gone pretty well, I think, especially from the feedback we're getting. So I appreciate that, and I appreciate you stopping by this morning. So my plan here today, based on the amount of time we have, we'll go through three different markets. We're going to start out with the S&P this morning, but before we get to that, just a quick rundown here. And of course, there's always risk when trading, so keep that in mind. And I always just kind of relate back to good old common horse sense, as we like to say out here in the West. And that is, don't trade with money you can't afford to lose. The cool thing about Nadex, of course, is that you have, ahead of time, you'll know your risk. But again, don't trade with money you can't afford to lose. All right, that's me. Been involved with the markets for a long time. Blessed in that I don't have a whole lot of gray hair, but that's changing. Anyway, let's come over here. So one of the things I like to do is always look at the news ahead of any sort of trading analysis that I do, especially if I'm going to contemplate a trade, because I don't want to take a trade going into the news. I want to let it pass by unless there's a couple of hours or so between now and a news event. And the reason for that is because the news can be, at least the reaction to the news can be very difficult at times to interpret. And so rather than deal with that, just let it come and go. And then usually about an hour or so after the news, that's when I'll start looking at some shorter term intraday trades at that point. All right, so what I like to do, these are the two websites I like to use to basically review the news: forexfactory.com and myfxbook.com. You can use them both or one. I probably spend most of my time at forexfactory.com. So let's go over there and we will take a look at the news events. All right, so this is for Tuesday, but if you come down here, once you're at the website, by the way, you don't have to join their site or anything. It's just a cool site that provides the news for us here. And if you click on more, it'll show the whole week. But what I like to do here is I'm going to come up to filter right over here in the upper right corner, click that, and just uncheck everything excluding the red high impact folder. We'll keep that and click apply filter, and then we'll show more, and you can see the news events for the rest of the week here. So here today, this is, by the way, East Coast time that you see here. So we have a news event coming up here at 6:45 p.m. out of New Zealand, and here out of China later tonight. Then tomorrow we have a couple of big events out of Canada, so be aware of that. Those are at 8:30 a.m. Eastern time, and then at 9 a.m. Eastern out of Great Britain, and then in the evening again out of Australia. So there's some news events there that can affect those currencies that are associated with those specific countries. All right, and then on Thursday, out of Europe, and then down here as well as out of Canada and the US. Now, one other thing here I didn't mention, but tomorrow OPEC meetings all day long, so that could have an effect, whatever language may come out of those meetings, on the crude oil market. So be aware of that as well. All right, so my FX book is this page here. So one of the things I like to do here as well is just kind of filter this out a bit. I click on the more button right here, and I just uncheck these, and then I'll come down here to save, and they will list or rank the news a little bit differently than what it is at Forex Factory. So you may want to look at both. You can see there are several other items here for today, tomorrow, etc. So here today we have out of you can see, by the way, if you hold your mouse over the flag, if you're not familiar with that specific flag, it'll tell you the country. And there you go. That's just a quick rundown of the news. So really just kind of coming back here, there's really nothing that's going to affect any sort of market activity here today. It's really kind of a light news week for the most part. Let's get to the charts. By the way, if you have any questions, feel free to type them in the box there. I'm happy to try to answer them for you. All right, get the charts up here. All right, so this is the June E-mini S&P 500. You see the market's actually up about 10.5 points here at the moment. Of course, it opens here at the bottom of the hour. And this is my workspace, the way I chart the markets. I look at multiple time frames. I'm all about top-down analysis. In other words, starting at a high time frame and working my way down. And that just allows me to see more detail what's happening in the market. I like to use, multiples of 3 or divisible by 3. So in other words, if I'm looking at for instance, this upper center chart here is a 3-minute chart. The next higher time frame chart will be a 9-minute, 27, 81, etc. Some folks will just look at an hourly and a 4-hour, maybe a half-hour chart, that sort of thing. That's great, but this is how I happen to do it here. So you'll see a lot of lines of different colors on the chart here. I'm going to start out here with the 4-hour chart today. What I like to do is I use rectangles here to kind of highlight key resistance or support zones for me. Typically, the resistance zones are going to be red, and the green just has a different level of support. For instance, dark green, more major support than the lighter green. The purple is kind of an intermediary. And I just kind of use these just to give myself a visual. And I have some indicators down at the bottom panels. This is one that I developed here, the top one, and then also the lower one is one I developed. This upper one helps me read momentum in the market. The lower one helps me identify divergence. And then the mid one is the slow stochastic, which is available on virtually any charting platform. So here today, let's take a look here, starting with this time frame. We've actually had quite a loss of momentum in the market going back here to the beginning of the month. And again, this is a 4-hour chart, 243-minute chart, so almost 4 hours. And if we look at this peak here down to where the market's, where momentum is currently trading, and we basically compare that same time frame in price, you can see how price has slowly moved higher, but it's done it on a loss of momentum. And as we come into this red area here, this resistance zone that's just above the market, I'm going to anticipate we're going to have some sort of reaction there. In other words, a pullback. And so this is where I'll be looking for an opportunity of a chart pattern to develop. So I'm looking for a congruency between momentum, resistance, and chart patterns. So the type of chart pattern I'll look for is a double top, a head and shoulder top. And the combination with that, combined with my read on momentum, that will tell me whether or not I should be considering a long trade or a short trade. In other words, a long trade would be a buy into the zone, which I'm not a huge fan of. But if momentum, for instance, if you look at this momentum indicator here, if it takes out this peak right here, which we're not real far from, but if it does, that means there's renewed buying interest in the market. And so it may be worth the effort to potentially consider, again, just a consideration at this point because we're nowhere near, but a possible move up to maybe that blue resistance line I have inside my red zone here. So that's only on this time frame. So we got to take it all into context here by looking at some of these other time frames. So right now we have a momentum that is slowly starting to regather itself, but we're also in a region here where this stochastic, I like to call it my cycle indicator based on the settings that I have. And this is an area that we could see it top out. All right, so then I mentioned earlier that I have the third indicator, the one on the bottom, it helps me identify divergence. And you can really see that here from high to lower high. And you see right here from high to higher high. So definitely some divergence. So that's what I'm talking about. If the market happens to pop a little bit higher, we could see a retracement here. We could see a possible topping pattern take shape. Again, each bar or candlestick on this chart is 4 hours in duration. So it'll take some time to unfold. But let's work our way down here, see if there's going to be any sort of movement perhaps later today. You can see here that over this is an 81-minute chart, so we have about 5 candles here. The last 3 are doji candles. Those are candles of indecision. So as the market is pushed higher here, we haven't really done much. And you can see how momentum is dropping off here as well. Am I using NinjaTrader? No, this is actually a bar chart trader. If you go to barcharttrader.com, you can actually download the demo there if you're interested at all. Bar chart is a sister company for us. Yeah, Armand, if you want to check out more about me, you can find a bunch of information on Nadex site. If you go to their YouTube channel, for instance, you can go. I'll give you my web address. You can call our office, actually talk to people. We have real people here in our office. If you want to find out more, that sort of thing, I'll be happy to pass that on to you here at the end of the presentation here today. All right, so here, this consolidation, we talked about the possibility here with the market pushing up to that zone. Now you can see a little bit different appearance here. So the market's at 92.20. That's another 10 handles to get to that level. So there is kind of a gap here between price and the zone. See that right there? That we could see this pop into as momentum is starting to grow a little bit, but we're also, you can see a little bit clearer here how we're rolling over a bit. And again, we talked about the divergence indicator displaying some divergence, and that looks like it's about this peak up. So we may not get much of a push before the market dips a little bit. All right, so I'm just going to keep working my way down because I want to try to cover 3 markets this morning if we have the time. Here's the next time frame lower. So I went from an 81 down to a 27-minute. You can see this even clearer here. So now I start to see a bit of a triangle pattern that has shaped up here. So I look at triangle patterns as trend continuation patterns. In other words, since the trend here has been to the upside, as you can see, right, that I would consider this possibly a move out of this to the upside. Remember, we saw that resistance zone is about 10 handles above, so we would have some potential room higher here. Again, just analysis, not suggesting anyone take a trade here yet, because there's a lot more to look at here. Just giving you a rough idea of things to anticipate going forward, especially after we end the program here today. You can keep an eye on the market and see how things unfold. But now, back to the chart here, you see the pattern I've highlighted, but look at this, how this is fading here. Right, so we're virtually at zero momentum here, just above the zero line in momentum here at this point in time. Of course, we're still about 18 minutes from the open this morning, so that can change. But we've had a little bit of a pullback here in momentum, but we still have a bullish chart pattern. See, we're not getting the congruency between patterns and momentum here at the moment, at least as I work my way lower. Now, one thing I do want to do is I want to open this back up here, and let's just sync this to the other charts, this triangle pattern here. All right, so yeah, so there, a little clearer view here on our 9-minute. Now again, you see momentum is kind of zeroing out here, but this particular time frame where we're looking a little bit further into the, or under the hood, so to speak, right? You see how this cycle is trying to hook back up and potentially break to the upside. All right, so I'm gonna just keep an eye on this here later this morning. Here's the triangle pattern drawn out on a 3-minute chart. Again, there's not a lot of momentum in the market right now, but it's suggesting that we're gonna see a potential push a bit higher here, but we could see some rejection because we have some divergence here going forward. All right, so that's the S&P here this morning. So again, just kind of leaning towards the upward movement, but again, the market appears to be running out of steam here, at least first thing here prior to the open here this morning. All right, let's take a look at crude oil this morning. June crude oil, we roll out to the June contract here on Nadex. It's up slightly on the session, up about 0.25%. So we'll load that up. One of the things I like to do is either Sunday night or very, very early Sunday morning, very, very early Monday morning, is go through and revamp my zones, anything that might have changed. If I had, as I don't look necessarily at the markets, I don't trade a lot on Friday afternoons. So I'll come in and readjust my zones as needed. Here is the June crude oil, and you can see from the 4-hour chart, again, top-down analysis, so working from the higher time frames on down. Above this, by the way, I have a 729-minute chart, and then I just go to the daily from there. Those are also on this workspace, but for time considerations here today, we'll just stick with the 4-hour and kind of work our way from there. But you see how price is kind of in between those two zones, the resistance zone, which is the red one, and the support zone, which is the green, and also just sitting above kind of the middle between those two zones there, just above that yellow or gold line that I have drawn. All right, so first thing that really jumps out to me here this morning is this from low, and this again is my divergence indicator. So I look for difference in these swings. So here from swing low to higher swing low, and I come up here on price, and I'm really kind of looking, well, that started in the wrong spot there, but we'll just kind of, basically it's a horizontal line. So essentially they're diverging from one another, looking for a bit of a push up, again, to test resistance. Resistance being this whole zone here. And if we do this, you see the bottom of that zone is about 64.06. So it's about 30 cents or so away from where the market's currently trading, a little bit higher. And that's where we could start to see some rejection in the market. But for now, we could, based on the 4-hour time frame, we could see a bit of a push higher. We have energy here. By the way, the oscillator, not only do I use it to look at cycle highs and lows to help identify those, but also use it to help display the energy in the market, or the force in the market, if you will. Force of the buyers, force of the sellers, and that's also what this momentum indicator is helping to identify as well. And you can see here we're drifting sideways, so we're right in the middle. The midpoint of the oscillator is 50, and it's just barely above that. And again, momentum is right around the zero line, so we're not seeing a lot here, a lot of action here this morning. Pretty quiet, actually. Let's work our way down here to the 27-minute. So you can see here, so I have a couple of different moving averages here on the chart as well. I use those to help identify support and resistance areas. The purple one here is the 200 period moving average. The market ramped up to that, got rejected right there at that moving average. And also on this time frame, you can see if I look left, look at that. That is a resistance zone as well. So double resistance there, moving average resistance, horizontal horizontal trend line resistance on the chart, and price got rejected and now pushing lower. So now coming into some moving averages here down below. We had a little bit of momentum to the upside, but you can see that is starting to angle down, oscillator angling down as well. Energy looks to be fading here from the resistance here. But bigger picture, if you look at this, you can really see how price is kind of in a channel here. So just coming off the top of the channel, working its way now towards the midpoint of the channel. So here's the thing: if a market is inside of a range, in the middle of a range, it has what? It's got about a 50-50 opportunity to go either direction, right? So we're in the middle of something. I prefer to look for the market to be kind of at the end of something, end of a rally, end of a decline, that sort of thing. And here we bumped into resistance. So in that regard, this would have been a potential area of perhaps that provided a trading opportunity, as it was a look at these multiple touches here. On the upside, on the downside, we have multiple touches too. So really a solid trading range. Looks like it's about 40-cent range the market's been stuck in. This would have been an area to potentially take shorts up here, but that's come and gone now. And now we can see the market is, if you look here, it's moving down. Energies they're moving down. So we could see a little bit further push, but right now bumping into support. So not a lot of activity here at the moment in the crude oil market. Let's work our way a little bit lower. Again, I'm going to actually draw the channel here on the chart so we can keep that on here, reference it. So this is a 9-minute chart here. Again, you can see how price is about the middle. In fact, if I just eyeball that's not real technical, but just kind of eyeballing the midpoint. In fact, let's do it this way. We'll get a little bit more exact. We'll use the Fibonacci retracement and basically just measure from the high to the lows here. And you see the midpoint is right here. That's a little bit more exact. So you see the market is not far from that level, that blue or cyan colored line I just dropped on there. So at this point, no trading opportunity for me here in crude oil. I see a lot of confirmation that we are in the middle of a range. Don't want to be trading the middle of a range. I want to trade the extremes if I'm going to look to trade a trading range, i.e. channel here. All right, so we looked at the S&P. We looked at crude oil. Not much happening in crude oil. We're getting a little bit of a push lower, but honestly, we just haven't moved very far. That's about a 30-cent move here on crude oil. So what we'll do here is we will look to go out to one of the Forex pairs here. So let's look at the US dollar Japanese yen Forex pair. Armand, did you have a question? Happy to try to help you out. I saw your earlier question. I responded to that. I'm not sure if you heard me, but if you have another one, happy to help you out. All right, so here is a Forex pair, the US dollar Japanese yen. Again, we'll just start up here about this range. Now, big difference here. See how the market's inside this range already? This goes back to resistance that was established way back the first part of March. All this consolidation here. The market ramped up into this and then is kind of just grinding here over, gosh, so the 14th, and then here on the 15th, and now we're on the 16th. So you see a lot of wicks, a lot of small candles of indecision here inside of this resistance zone. Note here what's happening with the market. We really have kind of a series of somewhat equal highs. There are a couple points here where the market popped a little bit higher here, but even if I was to angle this line, it's not going to be to the extent that this fade or loss in momentum here at the moment. Now, the markets never, move up, straight up or straight down for very long periods of time. So I always anticipate some sort of retrace or pullback. And just by using basic tools, for instance, the Fibonacci tool, I like to measure my momentum, from swing high to swing low. And here I can see the market, the momentum, has retraced about 61.8% of that move from swing high to swing low. So if it's going to bounce, it's going to do it in this range here. You can see how the oscillator is starting to hook up. Look at price back here, retesting the high. Let me zoom in on that for you. That coming in towards the high. A lot of wicks up here. So the market likes to fill in wicks. Wicks are the thinnest part of the candle, if you're not familiar with that. These are Japanese candlesticks that are on the chart here. Let's kind of do this for you. So markets like to fill in wicks, and you can see we have wicks all the way up to this high. That's at 112.09. That's gosh, what is that? That's another 10 pips or so higher here. So we still have some good momentum to the upside here in the market, but we got to look at these other time frames as well. So oscillators hooked up, momentum is pulled back, and as I mentioned, if it's going to stop its retracement here off of this 4-hour chart, it's going to do it right in this range here. Now, we also have, if we look at this a little bit closer, from low to lower low, from low to higher low, so we have some divergence there. And see, that's why the market has popped here, because of that divergence. So that when I find these divergent moves on the divergence indicator, I look for the market to seek out the nearest level of support or resistance. It does it a high, here, right in here. This would be it right here. And you can see how the market's just below that level. That would be the first go-to that I look for if I find an opportunity to trade it. Now, at this point, I don't have an opportunity, a little bit late to the party here this morning as far as the bounce off of that support, but the market has bounced and is up here near the upper ranges of this zone. So at the moment, a little bit bullish but let's look at the other time frame. So let's work our way down here. All right, so I'm a big follower, big believer, as you may have gathered already, by looking for divergence. I look for it on all the indicators, but specifically, I have this guy here, the lower one, and we had this move right here, and it's not real accurate, but you get the idea, I think. All right, look at that, from there to there, and the market bounces and tests the nearest, or seeks out the nearest level of resistance, which is right up here, and it did that on that green candle, so it's a nice move up. And momentum is starting to shift back to the upside here. Now, one of the way I like to project price, the potential movement, excuse me, and if you look here at this indicator, as we've taken out this swing high here, this would be, of course, the next level, and it already did it. The market tested that level. So now, again, playing with these highs, a little bit of indecisiveness in the market. We have almost a triple top here. Let's see here, maybe almost a quadruple top. So we have high, 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 and not quite there, but right up in this range. So we have a little bit of energy to the upside here at the moment. This is starting to shift from down to up. This has shifted to the upside, so we're seeing that force in the market kind of shift gears here on this time frame. But again, you can see it's been stuck in this range. Gosh, I can come all the way back to this day, and this was April 12th. And that was early in the morning Central Time. Let's take a look here at the 9-minute. So again, I'm a big believer in support and resistance. That's why you see all these lines and these colored zones here, because the markets, in my opinion, move from zone to zone. In other words, those support and resistance to support, kind of act like magnets. These other tools just help me identify the force behind the energy in the market that could be, tipping its hand to move from the current zone, to the next zone. All right, so you can see again, very tight channel here, very tight range. We have some bullish momentum that's retraced a bit. So let's see here. Let's come up here, and this is kind of the area here. I'm going to draw this all the way down to these real bodies, these thickest parts of these candles, and this would be the next anticipated area of a fill. Now you see that's not very far. That's only about 4 pips or so. But this is the key area up in here, really from the wicks here across the top edge of this red zone here. And that is a little bit deeper. You see how the moving average held support here inside the range. Let's go down in time here. All right, so again, we've had a move up here. The market's pulled back. Okay, so low to higher low. Looks like low to lower low over here. Even if we just kind of go real body to real body, you can see that nearest level of resistance is right in here. The next one, of course, will be the top of the range. We have a couple of things to note here. Almost a triangle pattern. It's trying to form here. That's a bullish chart pattern. And we saw in the upper time frames how the market has some room to move a bit higher here out of this range. So the oscillator has kind of hooked up here. So what I'm going to be watching for again on this market is for a bit of a move up and test those wicks. If you recall just earlier as we were looking at one of these higher time frame charts, let's pull up. We'll go back to the 81-minute chart. I mentioned how the market likes to fill in these wicks, especially on these higher time frames. And you can see that could put the price action up here to this level. Let's do this. Right across those highs, right up into that area. Yeah, so we got a couple questions here. Let's, yeah, Steve, you nailed it. A bull flag, you got it. One of the questions from Deborah here. When you put on a trade and you watch it unfold, do you ever take into consideration when an expiration is coming up? For instance, in the Forex market, it expires several times a day and traders are closing positions. Won't that affect the price as that is happening? Not so much. What the way I do this, Deborah, is I will usually use end of day binaries or end of week binaries. So I'm using the weeklies or the end of days. So I give the trade plenty of time to unfold. Now, if I'm trading directly off the 3-minute chart, then I will probably use a smaller time frame expiration, where I'll have an hour to or more, an hour to maybe hour and a half, 2 hours till expiration. But if I'm taking the trades, for instance, off of a half-hour chart, I'm going to use the end of day, half hour or higher. And then if it's off the 4-hour, for example, it might be the weekly. So I try to give the trade room or time to unfold, because one of the situations that all traders run into, whether they're trading binaries or just regular, say a stock option, for instance, they always undercut the amount of time they allow themselves or allow the trade to unfold. So I like to do it a little bit longer. As I mentioned, when I first got started trading binaries, I would use much shorter expirations, but I found that the way I like to analyze the markets, I like to give it a little bit more time. And I also don't tend to hold the binaries until expiration. I tend to try to get a piece of the pie. In other words, I project out where, as you've seen me do here this morning, where I think the market is likely to move to. And then I can also project out what the value of the binary might be at that point if the market does reach that proposed level. And then I set an exit accordingly. So some cases I might look for a 15% return on investment. Another case it might be a 30 or 40% return. And so that's kind of the way I look to trade these things. Now that's just talking straight binaries, not looking at the spreads or the touch brackets at this point, just talking the way I tend to trade the flat binaries. All right, so back testing the low here of the triangle pattern. Remember, we had, if you look here at this 4-hour chart, the momentum has dipped, or had dipped. Look at the angle. That's a pretty sharp angle there. The market hasn't moved a whole lot yet here off this 4-hour chart. We even have kind of a flight pattern here on the 4-hour chart. Kind of draw that out as well. So the way I tend to trade the Nadex binaries is looking for a return on investment. My minimum is right around 15 to 17%. So when you get proficient at it, you can start to look to trade quantity where those ROIs come into play. One of the things that I've run into over the many years I've been an educator is that the main focus is always how much am I going to make, rather than how much can I lose. So that would be first and foremost in my mind, how much am I going to lose? How much is that risk if I'm wrong? Where am I going to exit the trade if I'm wrong? Then I look at ROI, because if you focus on the analysis and the process of understanding the rhythm in the market or the energies in the market, then the money will come. All right, so today we looked at the S&P, we looked at crude oil, and here the dollar yen. Now, the S&P had just opened about 4 minutes ago, so I want to go back there before we end today's session. But before I do that, look at this over here, my quote board. This market right here, crude oil, up now 3 cents, so it's declined quite a bit here, didn't it? Remember we were talking about this channel? Price is now almost right there. It is, just touching the exact midpoint of this channel here. You can see on the 9-minute chart, and it could bounce in here, right? Because we have a lot of support from moving averages here on not only this time frame, but if I go up to say the 27-minute time frame, right here, you can see there's a lot of moving average support there as well. But I don't want to trade that in the middle of a channel. That's a low probability opportunity. I want to trade it from an extreme. All right, so let's look at the S&P. Oh, before we do that, just real quick here, let's take a look at gold. So gold, yeah, so gold breaking down here. You'll note I have, I was doing this yesterday, this ellipse area here that I felt like gold could really move into. And look at it now. So we're almost to the halfway point there. The next support level is right down here at the 1270-ish area. You can see right here, 1269, which is at the bottom of that ellipse. So I'm watching for gold to possibly move into that direction. We had this last week. We talked about gold. In fact, gosh, you can just barely see it. I had this little triangle pattern here. This is on the 4-hour. The market dipped and then rallied right into that area I talked about. If you go back and watch last week's video recording, you'll see this. You can find that on the Nadex site, I believe. You can see it went right into that zone as I talked about on the video during that session, and then tanked right from there. Hit that resistance and rolled over, and now is moving lower here again today. Currently down 1450 at the moment, so 1.12%. Let's take a quick look at the S&P, and then we will wrap this up for the day. So the S&P, so we opened, look at that, and broke out of the triangle to the downside, tapped the 200 period moving average, which is this purple line. Let's get that lined up properly. There we go. Look at that, almost spot on. Almost spot on right there. Tapped it and then bounced, and now back inside the range here. So I look at horizontal trend line support and resistance, angled trend line support and resistance, moving average support and resistance. I think those are all key. So price, now we scoop back up here to the 9-minute, and you can see that triangle pattern with price kind of right in the middle, much like on the channel, right? Remember, a triangle pattern is a consolidation pattern as well. Just like a channel, it's just that the swings inside of the triangle are tighter. In other words, the swing high is lower than the prior swing high. The swing low is, I'm sorry, I said that incorrect. The swing high, so we have this swing high, and then we have a lower swing high. We have this swing low, we had a higher swing low. Then we had the breakout, and now the market's right in the middle here. Look at momentum, remains pretty flat here. No indication of likely direction quite yet. All right, everybody, thank you for joining me. If you have any more questions, I'm happy to help out before I log off here this morning. Hopefully you picked up just a tidbit or two. You know, when you come to these type of events, I think it's fantastic if you can just walk away with one nugget. You don't have to know everything, but if one nugget can help you and you can make note of it and just reference those things, they can really help you down the road. So yeah, so Armand, yes. So did you hear my first response, my friend? I'm happy to. Let me show you this this here. Bring this back up. Yeah, so I mentioned that on the Nadex site, Armand, you can find they have a lot of information on the site about that as well. You can find prior videos that I've done with Nadex. There's an interview I did with Dan Cook, the Director of Business Development for Nadex. That is actually, if you go to this website right here, you can find the link for that. And let me highlight that for you here so you can clearly see it. This is our website right there. You can find out more information about what we offer. No pressure, if you want to call and talk to somebody in our office, they're there at 8:30 a.m. So in about 2 hours of my time, we're out on the West Coast. You can ask whatever questions you want. We've been around for a long, long time. And that would be our phone number there. If you want to contact us directly, you can email us at that number, right? Or excuse me, at that email address as well. But I would, to get started, just go to the Nadex site and search around for their videos. Go to their YouTube channel. There's a lot of stuff there. Come over here to our website, and you'll find the, gosh, I think we did about a 20-minute interview last summer. I was there in the Nadex office, sat down with Dan Cook, Director of Business Development. We did that, and you can just find out a little bit more about myself that way as well. Hopefully that helps you out. Yeah, you bet. Happy to help out however I can. Yeah, we'll do this. Hopefully we'll be doing this next week. I will be on the road, but I will do my best to be able to sit down with you folks here for, a good half hour or so next Tuesday as well. Thank you everyone for being here today. Really appreciate it. And like I say, hopefully you pick up a nugget or two. I keep an eye on these markets and just see how things unfold based on what we were looking at. We had a lot of choppy kind of sideways action. I think that's been the case with a lot of the markets here over the last day or so. So just be patient, wait for things to unfold. And that's another thing too. Folks, we tend to be impatient in this day and age. It's kind of the headline news way to trade. Everybody wants it like in 5 minutes, and just be patient and let things unfold. I think that can help you out a lot too. All right, everybody, have a great day and a great week. Biggest thing I can tell you in regards to trading is protect your capital. That's your employee or employees. Make them do work for you. But if they're not there, they can't do work for you. So protect your capital. Remember the risk involved with trading. All right, everybody, have a great day. I'm Jim Prince. God bless. We'll see you all again next time. Thank you so much.